And welcome, it's Mary Ellen McGonagle, Senior Managing Director of Stocks here at Simpler Trading with your weekly Edge Show. Let's take a look at what we're going to be reviewing today. And first up is impactful news that drove price action last week. And it was a jam-packed week. We'll review some of the more relevant information that was released and how the markets responded. And then beyond that, we will take a look at the broader markets and beneath the surface as well. We want to uncover which areas are trending higher and poised to remain so. That brings us to the viewer question of the week, and it's all about how you can uncover where that strength is currently taking place. And I will share with you some screens and quick tips. From there, you can then drill down to individual stocks that are poised to outperform. So here we are with some of the news that was released last week. First up, the Federal Reserve did raise their Fed funds rate by 0.75%. Not entirely impactful. More impactful were comments from Fed Chair Powell talking about rate increases going forward. And Powell did hint to the fact that we may not have as an aggressive stance into the latter part of the year. Also comforting were Powell's comments regarding the fact that he does not see a recession on the horizon. The economy is still quite vibrant. Employment levels are still quite high. And those are just some of the factors that he keys in on. Treasury Secretary Yellen also talked about the lack of signals of a recession. Both comments did serve to really help boost investor confidence so that the markets traded quite a bit higher. Also last week, we did see several mega cap FANG stocks release their earnings today on Friday, Apple and Amazon among them. And these reports did also boost the markets quite a bit as the numbers were either positive or not as poor as anticipated. So also this week, we did get consumer confidence. It did decline a bit in June. However, other news this week is centered around the Inflation Reduction Act, where the Senate did agree to a position so that we are closer to getting that passed. A lot of the spending in that act is going to be centered around a clean air bill, which really helped boost a number of solar and other alternative energy stocks. Also, strong earnings in these stocks boosted them as well. Inflation, unfortunately, on Friday did come out quite high. It remains at a 40-year high, leaving consumer spending flat for the month. However, this particular news did not hold the markets back. Generally, we are seeing very constructive price action where investors are able to look the other way when either economic or earnings numbers are not as good as anticipated, and stocks are still trading higher. Next week, we do receive information relating to inflation with the manufacturing PMI, but really important next Friday will be that July employment number. And this is one of those key metrics for the Federal Reserve in gauging where we stand as it relates to a possible recession. Also, factory orders will be released next week as well. So, where did the markets close for the week? We'll take a look right now. Here's a daily price chart of the S&P 500, and the markets were up about 4.5% for the S&P, and we can see this nice advance well above this red 50-day simple moving average. We also have these shorter term 10 and 21-day moving averages trending upward in constructive fashion. Your next area of upside resistance is going to be this 200-day simple moving average, which gives us quite a bit of upside room to continue to trade higher. Momentum-wise, your RSI trending upward and above 50. Likewise with the faster moving stochastics, both signaling positive characteristics so that the near-term uptrend in the markets remains firmly in place. So let's take a look. We're going to look at the underlying 11 sectors in the S&P 500. This is a 2-month daily price chart view that's available on stockcharts.com. And it's really quite helpful because, as we talked before about the ability to uncover where the current relative outperformance is taking place, you can simply add, in this case, I added the RSI. There are other indicators that you can add. And then I've sorted the 11 sectors in descending order so that your stronger sectors are up here in this upper left quartile, weaker on the lower right side. So very quickly, as it relates to outperformance, I'll share with you those sectors, but also the reason why and some of the sub-industry groups in our next segment here. First up, industrials really came into play this week, up almost 6%. And you can see that it is in the forefront. This is highly unusual. We'll take a quick look here at the group chart because industrials have really been suffering. It's only over the last 2 weeks that they've really come into their own, all about earnings. I will share the specific primary area in that next segment. So from here, we can see real estate stocks and utilities up here in the forefront. Might be confusing in the sense that growth stocks are really doing quite well to have these rather defensive areas up here outperforming. But the reason is all about earnings. REIT and utility stocks are really knocking the ball out of the park because they've had an ability to raise their rates, and it is helping them maintain their growth status. Utilities, there's an additional reason in addition to strong earnings as to why it gaps up. We'll get into that as we move forward. Consumer discretionary up here, Amazon, of course, and Tesla, both key components. There are other areas on the move in discretionary as well, and we can take a look at that. And then further here, we do want to make sure that you're aware of those weaker areas. And this is XLC, communication services, all about internet stocks. And that is Meta Platforms is a big part of this group, down almost 6%. And then other internet related stocks that have been declining because ad spending has been deteriorating. So from here, let's go ahead and take a look at some of these other areas and ways that you can uncover strength in the markets. What I've done here is added 12 ETFs that are very encompassing of the broader market. So in addition to each of the broader market indices, I have the price of oil, treasury yields, the US dollar, software, semiconductors in that growth side. XRT is the retail ETF. We'll take a look at volatility, and then healthcare, medical products, another growth area. So again, we're on the prowl for those areas that are outperforming. And take a look. This is an area that I discussed a couple of weeks ago as it relates to semiconductors bottoming potentially here. The uptrend is continuing in place. The group was up over 4%. So another strong week for semiconductors. The outside momentum indicators are quite constructive. And when identifying stocks in this group, you will want to pay attention to stocks that are in similarly bullish fashions. And we have on my MEM Edge report, I did add 3 stocks over the last 2 weeks that are outperforming. They also have strong growth prospects. And one of the stocks did just report earnings. You can use that link below to gain immediate access. I don't have a lot of stocks on that buy list, but I am overweighted semiconductors. So from here, we can take a look at volatility. I talked about looking at this metric because it is also known as the fear index, and rising volatility is not good for the markets. It's really highlighting uncertainty. Take a look. We can see volatility continuing to drop. We closed the week at about that 21 level. Also key is it is now below this blue 200-day simple moving average, which is constructive. If we could get down to that 16, 18 level, that would be even more positive for the markets. So from here, I'm going to share with you an additional way that you can keep on top of where, if there is rotation taking place, or where that relative outperformance is, so that you can participate. So what I've done is put together a list of ETFs that are really, again, very indicative of representation among the broader markets. I do have about 40 of them in here, but we're going to focus on those ETFs that are up here in the forefront, that they are outperforming, and then I'll share with you a couple of names within that grouping. So first up here is IGN. We can take a quick look at the chart. This is a deeply oversold area of the market. It is tech networking ETF. We can see a nice double bottom formation, higher lows, super nice rally into the close. This 200-day is going to be critical as an area of possible upside resistance. I'll just share a couple of names because you can easily do this on your own. If you go to a service such as yahoo.com, type in IGN and ask to see their top 10 holdings. Those are going to be the names that are driving that ETF quite a bit higher. So we will take a look. I already went ahead and did that. And here we are with Arista Networks. And ANET is the ticker symbol, very close to the ETF. It is poised to turn even more bullish with the break above that 200-day simple moving average. Another stock that we can take a quick look at here that is a top holding in IGN is a little more bullish. It's Motorola Solutions, MSI is the ticker symbol. And what we're seeing here is a move above that 200-day simple moving average, super nice high volume characteristics and nice upside momentum with the RSI and the MACD. So let's get back to our list here. I'm going to share with you a couple of areas that are on the move. IGN, it is all about earnings and some of those bigger names as they are reporting better than expected results. Next up is ETF PAVE, P-A-V-E. This is an infrastructure development ETF and a very similar sharp rally taking place. This is also all about earnings. The underlying names here are going to be a number of heavier construction and infrastructure plays, very positive area as well. So here we can take a look at TAN. That is the solar ETF. We talked about some of the dynamics driving this group higher. And of the three we've reviewed, I would say TAN is the most constructive. A couple of characteristics here. We can see this gap up that took place on Thursday, and I'm going to go ahead and mark this up, and you'll see a difference compared to those other deeply oversold areas that have rallied. So here we are. I've simply drawn a saucer formation. What I want to focus on here is this gap up on very heavy volume that took place on Thursday, a lot to do with that infrastructure bill, but also strong earnings from the top holding in this ETF, which is Enphase, ENPH. We'll take a quick look at that stock, but look at this volume on this gap up based breakout. Nice upside momentum indication here with the RSI just crossing, and I would tell you that this group has further near-term upside, not only because of that bill, but because of strong earnings from some of the top holdings in this ETF. Let's take a look at ENPH, and this is one of only 4 stocks on my MEM Edge report holdings, suggested holdings list that I added a couple of weeks ago. And here we are. We can see the stock has had a continuation of this gap up based breakout, all about triple digit earnings and the company guiding growth higher. They're seeing a lot of vibrancy over in Europe. Look for continuation upside here. I'm going to write more as over the weekend in my report to identify a pullback buy-point area in that stock. So I'm going to leave it at that. Everyone have a great weekend, and I look forward to seeing you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.